Hello again, everybody. Doing here from DRFX Forex Swing Trading. Taking a look at the situation on the Euro US dollar as well as the Euro yen. Here we can see on the daily chart of the Euro US dollar that the pair has broken below the support boundary of this major consolidation setup, this major pennant setup, as well as this uptrend line. And we're now starting to see the market move sideways after breaking this boundary. So right now we're in a situation in which the market could either continue to break up below this area here in favor of the US dollar, or we could actually see the market head back above this downtrend line and take us back inside of this larger consolidation. Now, if we were to assume that the market is going to continue breaking bearish in this direction, then the first major target that we're going to be looking at would be the breakout equivalent of this pennant setup. Now with consolidations, all consolidations have a particular target to which they head towards before the breakout comes to an end. And this is what I call the breakout equivalent. And across the currency market, you will find that whenever you have range setups or pennant setups or any type of consolidation setup, these setups normally have a particular target to which they move towards before that breakout ends. So identifying what that target is going to help in terms of determining where our targets should be, so that we avoid a situation in which we either exit our trade much too early, or we hold out for longer than the market is actually going to be providing us with profit. So that is why it is important to identify where these breakouts are going to end, so that we can maximize on the breakouts without unexpected pullbacks. And just to give a brief example of this breakout equivalent, the New Zealand Swiss franc earlier this year provided us with a breakout of a pennant setup on its daily chart. And based on how I measure the breakout equivalent of consolidations, that target was expected to be at the 79.15 area. And as you can see from this result of the chart, this is exactly where the market headed towards and provided me with this strong 231 pip trade result. And following this, the market actually pulled back sharply as the market responded to the removal of the peg by the Swiss National Bank. So this is a strong example of when the market will hit its target, the breakout equivalent target from a consolidation breakout, and then pull back. As you can see from this chart, which showed the reaction of the market following that decision by the Swiss National Bank, as you can see here, there was a very sharp reversal that took place following after the market hit this target here. So this was additional confirmation to show that these are the targets that you aim towards before the market reverses. Now, even though this was an extreme example of the reversals that take place at this area here, I can also show you another example that took place within the context of normal market conditions. Here you can see that on this pair, the Aussie Kiwi dollar, last year, there was a breakout from this consolidation setup, and the target was set at the breakout equivalent to provide us with a 70 pip trade. Now, following that exit, you can see from this chart that the market pulled back sharply to break this uptrend line, indicating once again and confirming that this exit was the right place to exit the trade, and that the measurement and the breakout equivalent were the areas, or the measurement of the target at the breakout equivalent was very accurate. So this is the area to which we normally have to identify to determine where we're going to exit our trades when it comes to breakout from consolidations. So assuming that we get a breakout from this area here, then the breakout equivalent of this pennant would be at this area here. So that will be the first major target to aim for. Now, of course, that will be several hundred pips away, and you always have the option of exiting your trades before this area here. But this is a guideline to indicate up to the point up to which we can continue to trade, before the market, before the trend comes to an end. So mark this area down as the major target to aim for while you're trading in this direction. A similar setup is now on the euro yen, in which we have broken the consolidation boundary, the support boundary of this consolidation setup. So right now we're in a similar situation in which we could actually see the market continue to break lower, or we could actually see it head back inside of the consolidation. So right now, similar to the euro US dollar, we're actually starting to see the market move sideways following the initial breakout. Right now we're seeing that it has formed a small pennant setup, and a break of this area here is gonna tell us in which direction we're gonna be headed towards. So that's the situation with respect to these two pairs for right now. So we're gonna have to wait to see what the market provides us in terms of a signal in either direction. Since the euro US dollar and the euro yen move are highly correlated, then we're likely to see the similar movements take place in either direction on both pairs. So if a strong enough signal appears on both pairs to trade in either direction, we can double up in terms of the profitability that we get from these pairs. So a 200 pip target that takes us back inside of this consolidation setup could also be obtained by trading a similar movement on the euro yen. So that is how we can take advantage of currency pairs that are correlated and maximize on the profits within a very short time. So that is the situation on these two pairs right now. So we're gonna have to wait to see what the market provides us with in terms of a signal this week and trade accordingly. So until then, take care.